Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time. Welcome back to another episode of the Tech Behind FinTech. I'm your host, Anandri Oswagu, and joining me is Nick Halaris. He's a returning guest. Nick, how are you doing today?
I'm doing great, Anandri, and thanks so much for having me on again. It's great to see you.
It's always a pleasure to see you. Today's episode, Wall Street meets Main Street, the rise of corporate real estate investing. So real estate, rise of corporate home ownership. Let me adjust something. A little banner. We don't have that fully done, so we're just going to adjust it. Missed the home ownership part. There we go. Have to always have the right banners out there. Once again, Wall Street meets Main Street, the rise of corporate home ownership. I'm excited about this episode. I love going into real estate discussions with you. And, we've seen across the country, institutional investors scooping up single family homes. Before we jump into the topic, have to do a little bit of some housekeeping. We are streaming live from LinkedIn, Facebook, Twitch, YouTube. We also, not this time around, we're not going to have the live stream going from Instagram, but we are going to be streaming live from those channels. So let's get into it. Let me introduce my guest. Although he's been on our show numerous of times, for some who don't know him, we're going to do him justice and read his bio. Nick Halaris is the founder and president of Metros Capital, a company dedicated to investing in and developing transformative real estate projects. Nick believes strongly in the power of built environment to shape lives and is dedicated to improving lifestyles in America's great cities through a commitment of innovation, quality, design, and sustainability. Metros Capital invests in the urban core of America's great cities and currently has projects in Los Angeles, Atlanta, and Nashville. Prior to founding Metros, he was a co-founder and president of Age Capital, where he invested more than $150 million in residential and multifamily assets buying, rehabilitating, and selling over 150 residential properties throughout Los Angeles County and over 2,400 multifamily units throughout the Southeast. Nick is also the author and publisher of Profit, a widely read monthly financial newsletter, and a frequent contributor, host, and moderator for many of the top financial news platforms in the world, including Real Vision and Blockwork. Nick holds a Bachelor of Arts with high honors from the University of Michigan and a Juris Doctorate from Stanford Law School. Nick, always a pleasure having you.
Thank you so much, man. Appreciate being here. Just a couple addenda to the bio. I should have sent you an updated one. So I'm a podcaster now myself. I have a show called The Nick Halaris Show. And the newsletter has gone from monthly to weekly. It's called Profit Plus. And anyone who's interested can find me at just nickhalaris.com. But the focus of both the newsletter and the podcast is trying to talk to people and explore ideas around impact and what it takes to live a life of meaning and purpose, and how to be an effective citizen in this country. So anyone who's interested in stuff like that, in doing better so they can do good for the world, check out the newsletter and the podcast. We'd love to have you.
Love it. Also, I'm going to definitely get an updated bio from you moving forward, because it's obviously you're a friend of the show, so I expect you here many more times in the future. So let's get into it. Wall Street meets Main Street, the rise of corporate home ownership. I there's a lot going on with that across, especially the Sunbelt states and stuff like that. But I really want to get your take in it based on your thoughts, also from your experience, obviously, in investing in residential homes. With some of the research I did for this show, it really states that this trend started after 2008, right? After, people lost their home to foreclosure, homeowners suffered a lot of course, of predatory mortgage lending and so forth. But at that point, that's when institutional investors started to buy up single family homes, and it's just increased, over the next decade and so forth. And I just want to get your thoughts on that and how it's shaping up.
Yeah, absolutely. So what's funny is my very first press appearance ever actually is from, I think, a 2010 LA Times article where the reporter was investigating, maybe it was 2011, somewhere around there, investigating the early rise of institutional purchases of single family homes. At the time, I had just started my entrepreneurial journey and I was buying foreclosed houses in and around Los Angeles, and ran into the first buyers of, serious, institutional nature trying to buy homes. And so I got interviewed in this LA Times article, and the quote that I had at the time was turned out to be wrong, dead wrong. I basically was of the opinion then that institutions would struggle with single families rentals because of the management headaches and the sort of difficulty of doing that at scale. Um, and so that was my hypothesis at the time. I thought their expense ratios would be out of control, but they obviously figured it out. And now here we are 15 years later, and it's a huge and growing industry.
It's interesting that you mentioned the management aspect, right? Because there are articles from disgruntled tenants that said, it's different. I mean, let me just preface by saying I'm a real estate investor myself, not institutional, like small landlord situation. And I know how much attention I give, my team and I give when we hear an issue, we want to get on it. From feedback from tenants of properties owned by some of these big institutions, not the same. So you can have issues going on for a while, and let's say that they're evicted or they leave, patch up work is done to get the new tenant in. So the management aspect, is aligned with what you're saying. I mean, when you're looking at it from a pure, if you're looking at this asset as a pure profit play, you don't really, the individuals are just there, the tenants are just there to for revenue purposes. The care is not there on the management side. What are your thoughts?
I think that can be true. I feel like America has I hate this phrase, the landlord, but America has a landlording problem essentially because there's just widely different property ownership is widely dispersed and there's widely different experiences. So there are tons of examples of sort of slumlord type behavior across the board. And this is true of individual investor type owners or small companies like us, as well as, even some of these big institutional players. It's very difficult to control the quality of the experience. And when it comes to corporate home ownership, in my view, they are responsible to provide a higher level of service. And I think they're trying to do so because they've gotten so much political attention, most of it negative, for what they're doing. And so I think that there's probably more of a quality problem in like the other sector of property owners and not so much in the corporate sector for that reason.
You mentioned, in terms of some regulations and things they get from a political side, it seems like at least some of these companies are investing strongly in lobbyists, right? So I read that I have a quote here from an article that I read. Single family rental companies are taking notice to lawmakers' new push to rein in corporate landlords. In a February earnings calls for investors in American Homes for Rent, which own nearly 60,000 single family homes nationwide, one analyst inquired about some of this legislation against single family home companies moving through states and in Congress. Last year, it hired two different lobbying firms in Washington, and it since spent 230,000 lobbying lawmakers, according to federal disclosures.
Yeah, that one of the things I wrote down on my notes that I wanted to get into in this discussion is the political challenge to this strategy. There's no question that the politicians are like clued into this business and potentially interested in regulating it in a major way, or maybe even outright banning it. there was legislation introduced in Congress. I forget the name of the act, but it basically had a good PR to it. It was like the anti-hedge fund owning single family housing act or something like that. Basically positioning all these companies like American Homes for Rent as opportunistic Wall Street firms that are trying to take advantage of the American people. And that's going to we're just at the beginning of that wave, and I think it gets worse. And it's going to get worse in the sort of liberal cities first. And it depending on what happens in the election, it could become a national issue. But in my view, it's a misplaced political focus. The single family rental ownership by corporations is not the cause of the housing affordability crisis in America. It's an easy sort of boogeyman to go after. Like, oh, the reason why rents are so high and why housing prices are out of control is because hedge funds have been buying up single family housing. That's the story that people are out selling. And it's just not really true. And so there's so many other issues where if you want to ask a follow-up, we can get into the other issues, but it's not where I would be focused if I was in charge of policy in America.
I like, what we've seen constantly just throughout time, for the masses, there's always this boogeyman type of figure. We've seen that. It invokes fear, gets people emotional, and it pins the tail on a donkey. Like, this is who we should go after. But the fact does remain, right? Rent prices are extremely high. Home ownership is harder than ever for families. So those are the things going. That's what's happening, and people feel that. It's like I see a stat here. Institutions own 700,000 single family homes, about 5% of the national stock. Right, according to a research paper from MetLife, by 2030. They estimate that they will possess 40% of all single family homes, roughly 7.6 million homes. So it's interesting because, once they have the home, usually, okay, a homeowner or landlord gets it over a period of time. They may pass it on to their family, or they may sell it. So when family gets it, they want to get another home, they sell. But, once you have the cash flow coming in from a rental and it's owned by an entity at this magnitude, the selling part, well, what's the point of that, right? It's generating cash flow. It's giving their shareholders a return on their investment. So once it's bought, it's going to be taken at least for a certain span, right? Whether it's decades or in someone's whole lifetime. What are your thoughts on that?
Yeah, I think that on that quote, some of the numbers, or the one number that people should pay attention to is the 5%. So single family rentals as a business for institutional ownership went from 0 to 5% over the last 15 years. And in that time period, they've gotten a ton of attention from the politicians. So they really haven't done that much damage, right? They own a very small percentage of the American single family market, but they've gotten a lot of attention for it because of what's happened in the same time period is that housing has just gotten more and more unaffordable for everyone. And they're sort of the largest face in the room, the person with the biggest pocketbook. And so that's why they're getting the attention they are. I think it's true that it's unlikely that those houses that are purchased for rental by institutions are going to become like the first time home of an American. They probably will keep them and refinance them. They do buy and sell. So if you track sort of the ownership or you listen to their earnings calls, they are constantly messing around with these portfolios. And so they do sell them occasionally. I'm not sure what determining factors they're making, but they change neighborhoods or they change focus, change strategy. And so these houses, it's not like they're completely stuck once they get bought by an institution. But I don't know how big they're going to get. I think that 40% number is way overstated. I think they'll probably be on a similar trajectory, like over the next 10 years that they've been on now. And so they'll end up being maybe something like 10% of the new home market. I think that's an important thing that people should understand is when you hear these numbers, we're talking about new home sales for the most part. And so, yeah, they in a year like this, when nobody in America can afford a mortgage, they're going to eat up market share. They're going to buy a lot of percentage of the new homes that are coming online because they're the only people who can do it. But in a normal year, that's not true. 95% plus are selling to homeowners.
When you say new homes, just to get clarity, do you mean like new construction homes? Do you mean existing single family homes that are being sold? What exactly are you referring to?
New construction homes, yeah. When they started, as you mentioned earlier in your sort of first question here, when this industry started, they were buying foreclosures. So they were buying existing homes. So these are homes that were purchased by ordinary Americans, got foreclosed on by banks, and then the banks put them out to auction and they got bought up. Over time, they've continued to buy existing homes. And in recent years, when mortgage rates have gone higher, they've been buying a lot of new homes just because of the dynamic that I mentioned earlier.
That's good to know. But the question, right? So that's 5% nationwide, but there are some regions where there's a higher concentration of institutional investors. Like, if we look at the Sun Belt or places like Georgia, Arizona, Nevada, and California, where you're located in Texas, those percentages. They said, I have a stat from 2022. Investors purchased 24% of all single-family homes sold nationwide. The states with the highest percentage of investor purchases last year, this is from 2022, were Georgia, 33%, Arizona, 31%, Nevada, 30%, California and Texas, both 29%. So, yeah, you look at across the nation, yeah, small, but when you look at these places, they get a lot higher.
Yeah, I think the interesting thing about those stats is like those are the places that have actually been building a lot of houses. So it's not a coincidence that they're buying more in those places because there are many places around the country where there's very little building. Los Angeles City is a great example. Very difficult to build for sale single family inside this MSA. You have to go out to like Riverside, to build single family tracts. And so those numbers, they do look concerning. But I think that the data might actually that you referenced might be slightly different than you characterize. I think that those percentages are the percentage of homes bought by homes bought by institutional investors. So that's another thing that gets kind of messed up in these media stories. So like if you look at the broad data for investor-owned properties, investors account for something like 25% of all single families. And of that 25%, 5 of it are these big companies, the American Homes for Rent. And so the other 20% represents smaller property owners that own portfolios of anywhere from 2 to 100. I think that's where they make the cutoff in the data is like anyone who owns more than 100 or something is qualified as a institutional investor. And so it's true that in that cohort, in that 25%, the big institutions are now buying way bigger percentages than they used to. But if you look at the total, the total sales of homes in America, it doesn't look as scary as those numbers.
This is why we have you on, because stats are like a gift and a curse, right? Depending on how you read it, you can pose one argument or another one. I mean, that's the whole thing with stats, where it gets a little bit interesting when you see these numbers, but personal stories, like a real close friend of mine was looking for a home for his family in the Atlanta, Georgia, in the Georgia area. Wanted to get closer to Atlanta, but he just the pricing. He said, he just got a better bang further out. So we do know that a lot of those areas are high traction area for institutional investors buying it. I just know, it's one thing to look at the stats, and it's to hear someone say, yeah, we've been really searching for a home in our price range. We just couldn't find it. But once again, right, are we blaming the boogeyman, saying, well, it's the institutional investors' fault? I mean, there's other economic dynamics that go on to maybe why people are getting priced out and so forth.
Yeah, I think so. And I'm sympathetic to the argument that is being made by people who are anti-institutional ownership, because even at 5%, right, like that's still 5%. And so people like your friend are are competing against institutions that have a way different risk profile and have way more financial resources. Even if it's just 5%, so be it. That's still 5% of homeowners who are going to be facing that competition. And there's no question, right? Like economic activity happens at the margin. And so this 5% is a very powerful part of that margin. So if you're looking in a neighborhood that they're also interested in, that is a real problem. And the question we have to decide as a country is, how much of a problem that is, and whether, what kind of regulation, like let's say, we did want to try to do something about this phenomenon. What kind of regulation would actually make sense? What's been floated now is to ban it completely. And the other, places around the world are addressing like similar problems. I don't know if you caught the story recently, but the Airbnb stuff is the exact same argument. Airbnb has been a boogeyman for the affordability issue across the country. And recently in Barcelona, which has an estimated 10,000 units for Airbnb, they have passed a law that is going to phase out Airbnb and make it illegal by 2029, I think is what I remember reading. And so that's how they've attempted to deal with that boogeyman. Like, oh yeah, once these 10,000 units come back on the market for rent, then everything's going to be fine. Housing is going to be affordable again. I don't think that's true, but it's a similar example of this anti-institutional real estate legislation that is happening and is going to continue to happen. New York City did the same thing, right? They just banned Airbnb there. So this is, I really believe we're just at the beginning of this anti-regulation, and it's going to impact the market for sure.
And I wonder, I mean, Airbnb, the difference is, right, Airbnb is the corporate entity for sure, but you have individuals powering that, right? So you have individuals saying, you know what, I'm going to go sign up for 5 leases that I can, in layman's terms, sublet to short-term renters, right? Or I'm gonna purchase, X amount of apartments and try to sublet them for the Airbnb purposes. But I get it, right? So now when you do that, and someone's now looking for affordable homes to rent, they're basically no more, because the ones that were affordable, an individual investor or two or a smaller company came and said, you know what, this is a good business model. In a place like Barcelona, similar to New York, huge tourist area. So instead of staying at a hotel, this is an alternative. And for years, you had people making legitimate salaries and building wealth from Airbnbs, and those same people. So funny, you talk to them, they say, no, I'm not even interested in single family homes or long-term rentals. I do short-term rentals. That's what I do. But in this stage, when you're dealing with, on the institution side, where you can dedicate hundreds of millions to just buy out entire neighborhoods, right? To say, you know what, like for instance, I was reading, Tricon Residential has seen its annual revenue more than double since 2020, reaching $850 million last year. American Homes for Rent boasted to investors in February that rising rents had helped increase revenue from properties by 20 million between 2022 and 2023. Once you start seeing profits like this from an institutional side, we both have histories working in finances, so you don't back up, you double down now. You're like, you don't stop. You don't say, wow, you know what, we've just doubled our profits, let's call it a day, guys. No, you go, oh really? I think we found something here. You want to buy more and more and more and more. So I think that's the one of the main differences.
Yeah, I think that's true. I think I brought up the Airbnb example just to give the listeners a sense of like how this is already manifesting in the world, this sentiment about around affordability. But the risk for institutional ownership becoming a bigger problem than it is today, like right now, to me, it's not that big of a problem. It definitely could for the exact reason which you articulated. It is the problem with that industry, with the single family space in America as a rental, is that it represents, in my view, the single best risk adjusted return in the world for real estate. Like American homes, like if you think about it, like take off your American glasses for a second. Like if you are an investor from Asia or Europe or Africa or anywhere else, like there's nothing that looks as clean as that. You got an American legal title, which is clean, relative to many places on earth where you basically know you can sell it and you get your money back and no one's going to take it from you. You have a relatively stable currency, and you have this phenomenon where among Western powers, America is the only place where population is growing. And so you have this built-in demand. Oh, and by the way, America is based on this thing called the American dream, which is all about housing. It used to be about land, in the agrarian era. And in our era, it's about housing. And the reason American political scene is kind of looking as crazy as it is because housing is becoming out of reach. And so like the unifying force of this country, which is like, hey, I'm going to make my way in this world. I'm going to improve my economic lot so I can buy a house and participate in the American dream. That is being challenged in our life. The last 30 years has been one continuous challenge on housing. And the institutional ownership of single families is presenting yet another piece in the puzzle of the challenge. But from an investment standpoint, man, you couldn't dream up a better real estate asset. It has limited supply and unlimited demand in a place that is the safest place on planet Earth, the best economy in the world. And so that's why it's attracting so much capital. And it's not just domestic capital, it's international capital. One of my friends works with a lot of big sovereign wealth funds in Asia. Their number one asset they want to be involved in is single family rentals in America. And I get it. I would too. I understand what the risk profile looks like, and it's pretty incredible.
Let's dive into that. Why single family versus a multifamily? And then in question, because you have some investors who might say single family, but what they really mean is 1 to 4 units, where you have other investors who literally mean single family as a single door, 1 unit property, right? And I just want to clarify for the audience, when you say single family, are you referring to what is considered residential in the industry from 1 to 4 units, or are you just referring to 1 unit?
I'm referring to a house, a standalone house. That white picket fence, like that is the American dream. And it's also the dream of these institutional investors. Because here's the thing about this country, as well as anyone, that everybody wants to own a house. Everybody wants a piece of it. And even people who live in the big cities where like you can't really actually own houses, they end up owning vacation houses. There's 16 million vacant houses in America, most of which are vacation houses. And so there's just this incredible cultural demand domestically for the single family house. And it's not going anywhere. That's what people want to own. That's what we saw during the pandemic was like, what happened when people got scared? They're like, I got to get a house. And so the housing market went absolutely crazy. Prices went up way too fast and made the affordability issue even worse. And that's a reflection of this cultural ethos around owning a home.
I would pick your brain on that, right? Because you have a long history of investing. Some investors argue, more doors. So they're looking for apartment buildings. They're looking for, or if they're gonna more because depending on the type of investor, more because once you start getting over 4 units, the risk profile changed with the bank, and it's just a different type of mortgage product that you'll get. But they're always looking for multiple units and so forth. Why would you say that, or what are your thoughts on the reason why single family investments are more appealing than those multi-unit buildings?
Yeah, it goes back to supply and demand. So we haven't talked about this yet, but now's as good a time as any. Like the reason that one of the reasons, let's say, that housing has become so unaffordable in this country is that we have a legacy of incredibly bad policy when it comes to the development and building of single family neighborhoods. It started at the end of the war and the movement around desegregation with redlining, and it only has gotten worse. Like, even though some of these practices are now declared constitutionally illegal, the legacy of that type of behavior has emboldened local politicians in every city in America. This is not just a liberal city. Everywhere, people make it really difficult to build housing. And so you have this crazy demand, which we talked about, and a political regulatory environment which makes it super hard to build. And so in a country like ours, right, 330 million Americans, biggest economy in the world, on a good year, we make 1 million houses. Well, guess what? 3.8 million immigrants came to the United States each of the last 2 years. And so we're talking about, like, that's 7 million people interested in the American dream. Not saying they can all afford it, but we only built 1 million new houses, of which 5% of those are being sold to Blackstone or more, in a year like this. And so it's just this crazy flip dynamic. And so the reason why the investors like it better than multifamily is they're looking at a place where supply is artificially constrained by poor policy and regulation and unlimited demand. And so it's like a perfect storm. Like, the median house in America literally just going to keep going like this for that reason, because no one seems to get it. No one, even like a progressive liberal president like Biden, hasn't really done a thing on housing affordability. They're doubling down on, like, low-income tax credits to build apartments. Yet meanwhile, local politicians around the city are blocking single-family development left and right, and nothing's being done about it.
Interesting. No, okay, so I mean, supply versus demand. Okay, I get that. I get that part. I mean, when you start looking at it like that, especially the stat where, okay, 1 million new homes are being built, but the amount of people coming in who, but like you said, might not be able to afford it, but still, we have a lower supply than the actual demand. High demand, low supply. So it's basic economics. It makes sense. Just really curious though. I'm really curious into. We looked at it from the institutional side. What are your thoughts from the small investor side? The person who has 1, 2 rentals outside of their primary residence.
Yeah, I think this is where the combination of policies that I've sort of been hinting at, like, it gets really dangerous for investors. So in addition to the anti-development NIMBYism, let's just call it what it is quasi-racist, definitely classist political dynamic in American cities, where they basically don't want you to build housing in certain neighborhoods. There's been, at the same time, the rise of things like rent control and eviction policy designed to, on its face, protect tenants from bad behavior by property owners, landlords. The downside of those laws, when you're a small investor, is that they are so favorable to tenants, even tenants who want to behave in sort of in a bad actor type of way. They're so favorable to those folks that owning a small portfolio can become very dangerous because you have this incredible concentration risk. I was actually talking to a friend yesterday at my kid's school, and they own a house in a very nice neighborhood of LA. And he was telling me this horror story about a tenant who was a family, thought it was a good tenant. But around here in this town, like, you don't pay rent. There's no consequences for like a year. But if you're that investor, oh my God, you got to pay your mortgage, you got to pay your property taxes. And so there's this concentration risk. And what the institutions they face the same risk. You know, when they buy in jurisdictions like this, they have the same risk, but they're spread out over thousands of units. And so, yeah, so they're going to get some bad actors and some people who fall on hard times through no fault of their own, which is totally legitimate. And those are the people we should be protecting. And they can handle it. But for us smaller investors, that concentration risk is a serious problem.
So this crazy news story, you know, about that in New York. Two investors owned a building, and it was a, you know, quote unquote, a celebrity chef. So he moved in. I think he paid for about 3 months, and he ended up staying for 4 years rent free. What he would do is when they file the eviction because of New York's laws favoring tenants, he would do an appeal. So he kept riding it out for years, and it lasted for 4 years before they finally evicted him. And you know, as a small investor myself, I would have easily lost that property if I wasn't getting rent for 4 years. Because like, how am I going to pay that mortgage? Like, because you know, it's this misconception, I think, when people look at small investors, not so institutions that own property, they think that, oh, you have money or you're rich or whatever, and you can afford it. But no, it's like there's still an overhead that has to be met, and part of the rental payments help meet that overhead. If the rental payments are not coming in, that overhead's not met, and you too can end up, you know, you're not going to be evicted. The bank is just going to foreclose on the property. So, you know, I totally understand that. Do you see institutional investors going after states that are more favorable to landlords as opposed to tenants?
Definitely. So those stats you quoted earlier, like that's one of the reasons why they're focused in places like Florida, Texas, Tennessee, Atlanta. Although Atlanta and Georgia in particular is starting to look more like California with their renter laws and their eviction policies. So that might actually be an interesting one to watch. Like institutional ownership probably goes down there, I think, in the near term because of that. But it's a big factor, right? Like, I don't know what the difference, like I don't have any good data on what the expense ratio for them looks like in a place like Los Angeles versus Dallas, but it's got to be meaningful difference. Yeah.
I mean, anecdotal data, right? I don't have any stats on it myself. I've just seen videos and interviews from investors who say, "Oh, I only small investors, not so institution. I only invest in red states because the laws are more favorable for landlords." And it's not about, and the investors that are saying this, they don't necessarily have a political affiliation. They don't care. They're just literally interested in, if a person that I rent to, I can't get my rent from them, how fast can I get them out of my place so I can get a new tenant? And that's the modus operandi. It's not a political thing per se. It's just they just don't want to be left in a situation where you have to wait a year. I haven't, what you just mentioned in LA, I haven't heard a year. You know, where I do business, it takes about 3 months
That's
for
not
anything. But something that I learned, right? It's a difference between, you know, you're a lawyer, so there's a difference between, and I learned this the hard way, unfortunately, an eviction and a squatter, because a squatter has certain rights, where an eviction and where I do business can take about 3 months. But a squatting situation with no lease involved, that can take 5 to 6 months. You know, you hear horror stories of, you know, squatters going into places where seniors lived, and let's say the senior died, but the kids are not in that state, then they move in and control the place, right? And then once they're in for a minimum amount of time, they have squatter rights. So, you know, as you mentioned earlier, it's pretty scary. for the smaller investor, real estate investor, because of that concentrated risk and so forth. Um, so that's definitely an issue. Uh, what are your thoughts on that?
Yeah, it's a problem. I mean, when it comes to the regulatory environment around real estate, it to me, it's like, it's so crazy. It almost makes you believe in the conspiracy theory,
Wait,
because
talk.
like on the one hand, you have this legacy of anti-development political activity in local government, which is problematic in practice and problematic philosophically. It's anti-American. There's just nothing good about it, right? It's everything wrong with the dark side of American history. And then you have this other side, which is the well-intentioned, on paper, ideas around protecting people who are economically vulnerable. And so that's what you get with rent control, and that's what you get with eviction policy. And so these two groups are essentially made up of the same people, but they're pursuing policies that are at odds with each other. And in the case of this asset class, which we've been talking about the whole time, the only winner is the strongest financial player in the room, which is Blackstone. Because when you put all that together, like, the only one who can take that risk intelligently is Blackstone, because they can buy 1,000. And so we've literally created an incentive structure through this crazy policy, which was all from the same people, that now has invited their least favorite person to the table and said, here's everything. You want it all, you buy every house. And so that's what makes me think, like, I've been thinking about this a lot. Like, my first election that I could vote in was Bush versus Gore. And back then, I didn't know what they were talking about, but they were both talking about special interest groups. And President Eisenhower, in his farewell address, talked about the control of the government by the military-industrial complex. And now that I've sort of have this experience in real estate, I kind of understand what they're talking about, which is that laws are getting passed around here, and the only winners are these big corporations. And it's concerning, because American, in this case, homeowners and small investors, or would-be homeowners and small investors, are the ones who are suffering the most. And there's just opportunities being presented on a silver platter to investors who can amalgamate large pools of money.
What a way to bring it back. I didn't look at it from that perspective, because like, when you do, it gets really, really interesting. When you then mix that with the amount of money these groups spend on lobbying, right? It gets. I don't get into the whole conspiracy theory boogeyman thing. That's not my bag. But right, it gets really interesting. I mean, you look at it from the point of view of the person trying to buy a house. There's no houses available, can't afford it, blah, blah, blah. You look at it from the point of view from an investor who may be in a state that is more sympathetic to tenants, right? Wow. Especially during COVID, right? It was a moratorium literally on rents, right? Then you have the moratorium. And then, if you were in the business and you tried to do any action with your local city hall, or not city hall, or whatever, those city departments, it was done. It was a huge backlog. It took even at least 1.5 to 2 years just to get even. Everybody's remote. It was crazy. And you start looking at it from those lens. Then you look at it from an institution like a Blackstone, or one of these huge companies that can dedicate hundreds of millions to buying it. It's almost like, okay, huge opportunity here. And when we come in and we basically just buy all these things, our risk is shielded because it's so spread out. So, all right, we know we're gonna get out the bad apples, but the ones that are still there, we're still making a return on our investment. So when you look at it from that perspective, it's similar to the saying that the house always wins, right? So it's like, wow.
Yeah, that's what it feels like increasingly. And in real estate is sort of like one of the biggest battlegrounds for this to play out, because it's so tangible, and it impacts people in a very, daily way, right? Like where you live matters a lot, actually. And there's increasingly less choice for that.
Like, but Maslow hierarchy of needs, right? Shelter, food, clothing. Like it's a. I'm watching this survival show recently. I just got into this whole. It's like called Alone, right? It's on Netflix, and these guys they basically they're survival experts, but they get dropped off on this island, and they have to essentially figure out food, shelter, and it's interesting because the two main things, the two main things with each contestant is food and shelter. Two main things. Nothing else is as important. Food and shelter. You have some, right, that spent so much energy, and it's very interesting because they start looking at it like they're building this, like one person built this elaborate log cabin, but she didn't focus on food. So the amount of energy she spent doing that, she was weak because she couldn't replenish with the amount of protein. This other guy, very interesting strategy. He said, I'm just going to build a teepee, right? Because the energy I'm going to spend to build this teepee, and then it's gonna house me. It's not elaborate. It gets the job done. I can go fish, get food, and hunt because I'm gonna need to get my store. But in watching that in our conversation now, to bring it back, shelter. It's when you have absolutely nothing and dropped in an island, the two things you're going to worry about: food and shelter. And I think that's why real estate is like the asset class that you mentioned that's just so in demand when you look at it from the institution side, small investors, even sovereign entities, as you mentioned earlier.
Yeah, definitely. And it has this historical story here in this country, right? Like the fundamental problem of Europe and the time when Europeans were trying to come here was that opportunities for the ownership of land were so scarce that people were willing to do anything. They're willing to come over here and face incredible risk just for the opportunity to own land. And the question I think that we are coming to in America is the question of whether or not you can have a functioning, thriving liberal democracy in a time when people can't own, or not enough people can own. And so homeownership rate has like been hovering in the low 60s now for quite some time after having a decent run up. And if current trends continue, like that could go on a permanent decline, and we could be a country where we have more than 50% of the people renting. And the question I have is like, what does America look like if that's what we have? If people don't have a stake in it, I can tell from the young people that work for me and that I engage with around town, like this question of home ownership is like top of mind. Everybody wants to do it. Everyone wants to try to get a home, but they feel like increasingly like it's just not even possible. And there's all kinds of people that are being blamed for it. There's the Airbnb people are being blamed for it. The institutional owners of single family rentals are being blamed for it. And the Fed, a lot of people blame the Federal Reserve for their responses to the crises of the last 20 years, which is probably a legitimate response. But at the end of the day, like if we don't fix these broken policies, that's the world we're looking at. And I don't like how that looks.
And I mean, what we have seen when the people owned home, you have a vested interest in the neighborhood. It's different than renting. Like you because you want your property values to increase. It's a different type of community. So it's really interesting what you're saying is how does that look as the percentages increase with renters versus owners over the next 10, 20 years?
Yep. And the other question is, yeah, sorry to interrupt you, but how does it look now? Our national politics, in my view, kind of reflect what's happening, which is that the boomer generation, the older individuals and families, they own all the property basically. And then the younger generation owns very little. So you can just look at the chart, like they own everything. And who's clinging on power, right? Look at this presidential election. 80-year-old people, all the people in Senate and Congress, right? These are all people like that's a little microcosm of this dynamic, which is manifesting in real estate as young people rent and old people own. And the question is how is that going to resolve itself over time? What's going to happen to all the young people? Are they going to get houses, or are they going to end up stuck as renters? And it's hard to say at this point.
On that note, I think that's a good way to end this particular segment. What we do at the end of every episode, we give our guests time to talk about projects they have going on, how people can find them, and so forth. So I'm going to exit the stage and give you that time, Nick.
Okay, great. Well, thanks everybody for sticking with us. Hopefully this conversation doesn't make you too depressed, and I would encourage you, if you're interested at all in this subject, like the battleground to focus on is local politics, and that's available for anybody. Just get involved in your neighborhood, attend some of these meetings. You'll see, if you go to any meetings around, proposed developments in your city or your community, you'll see exactly this dynamic that we've been discussing around people who should be supporting development, but who don't for various reasons. You can find me all on my website, which is just nichalaris.com. I have two media products that I'm working on quite a bit. I have a podcast called The Nick Halaris Show, which is essentially about talking to people who are trying to make a difference in the world and teasing out what we can learn from them, how we can take what they've learned from their journeys and their passionate work and bring it into our own lives and become better ourselves. And so I interview everyone from politicians and members of Congress to entrepreneurs to authors of interesting books to nonprofit leaders, and it's cover all kinds of different issues. But the through line is that we're talking to people who are trying to make a difference in the world. I also have a newsletter called Profit Plus, which comes out weekly. And what I'm doing on Profit Plus is sort of my personal ongoing exploration of all kinds of issues, the big issues of our society. So everything from politics and policy, like we talked about today, but also to economics and investing and how to go about trying to build a thriving life, financially and personally, and having a lot of fun with that. And everyone can sign up for free on nichalaris.com. So thank you all.
Hey, thank you very much for today's episode. It's always a pleasure to have you. Always insightful conversation. Thanks for watching the Tech Behind FinTech. Thanks for your comments, your DMs. We really appreciate you. We are live every Friday at 12 p.m. EST. So you can check us out there. You can find us at the techbehindfintech.com. We also have a subscription to our newsletter. So if you go on techbehindfintech.com, please hit subscribe. And we should be launching a new platform by the end of the year. So we'll keep you posted in those developments. And we're really excited about that. Once again, thank you for tuning in. And that concludes our show. Cheers.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.